What is up, guys? This is Wade with Trade ATS. In this video, I'm going to be breaking down what's going on with the Dow Jones and where I think it's headed here in the future. So with that, let's get right into it. All right, so I got a weekly chart here of the DJI pulled up. And what I want to talk about is where I think it's headed. We got a lot of volatility in this market that's been happening recently, and there's a lot of speculation. Are we going into recession? Are we going to keep going? Another bull run? So there's a lot of speculation going on, and I know a lot of people look at the Dow Jones as a big economic indicator. Especially when it comes to recession or what the overall economic climate is in the United States, especially. So. What I want to do is I'm going to look here at 2008. I want to show you guys what happened, because this is the last major event that was kind of earth-shaking for at least U.S. markets. And I want to kind of show you the pieces that happened there, and then we'll jump forward to right now and show you kind of what's happening now, and so you can make kind of a comparison of the market that we're in. This is 2008. Here's the crash right here. Okay. Let me explain to you what happened here. And this is from a purely technical standpoint. I know there was a lot of fundamentals driving this, like especially the housing and all that stuff. But what I'm going to talk to you is from a purely technical standpoint here. One thing I want to mention is that to get your head around how the market's what really drives the market. Yes, fundamentals do play a major part, but what's the most important to understand behind the fundamentals, behind the technicals, is the beliefs. Okay, when someone decides to either buy or sell a market, whatever, but in this instance we'll just say buy. When someone decides, I'm going to buy, I'm going to enter a buying position, I think market's going up. Behind that belief is the fact that they think that they're going to make money. Nobody ever gets into a trade or into an investment or into anything and says, "Oh, this is going to be an awesome time for me to lose money. I should get in." No one thinks that way. Everyone thinks they're a winner. Okay? With every transaction in the market, is behind that transaction is someone with the belief that they are going to make money from that price level. Okay? So when you look at the market from that perspective, you start to really be able to see the sensitive points to where people are going to be pushed to their limit. And that's really what the ATS software and our algorithm is based on. It's based on looking at the market from purely that perspective. Where are people going to be pushed to their breaking point? And at the market breaking points is where you get the extremely discounted prices for entry, and that's where you actually get the true information of where the market's actually headed, is at those breaking points. So that being said, right here in 2008, we had this run up, and you can see right here, these are what we call liquidity lines. A liquidity line is an exact level where the ATS algorithm identifies, okay, a new belief structure has been created in the market at this level. And the liquidity line is the defining point where that belief is going to be tested in the future. So you can see in leading up to 2008, the market is leaving lots of liquidity lines. And what these are, we use them as buy liquidity because we're always looking to do the opposite of what the masses are doing. But what these basically represent are points where traders who have entered through this bull market, if price gets back to those levels, their beliefs are going to be challenged. If they bought here, for instance, let's look at this. We had this breakout right here. We had new expansion, which are levels that the market's going to move from. We had a nice run coming up here on the weekly chart, and that literally went up into the top from that expansion, right? Okay, if you bought right here, then your belief system is going to start to be challenged. Well, anywhere below that price, but people will still, they'll let a position go negative with the hopes of it turning around. They will. But where these people are going to really be pushed to their brink of what they can handle as far as a negative position is right down here. That's where the liquidity line is generated. That we know, okay, people They are entering buy positions. It's evident because the market is moving up. This is where they're going to be tested, okay? And we kind of operate on the premise that because 95%, 90 to 95% of people consistently lose money trading, that even if people think they hit a few home runs, they never close their positions with the maximum with the maximum amount of profit that they could. And there's a whole reason behind that, which I'll get into in another video, the psychology behind that. But they're not going to close that position with the most profit they can. Most people think, they're euphoric. Oh, I'm making so much money. And all of a sudden you get these big drops. And then they're like, oh, I'm hoping it's still going to go higher, and then drops, and then drops. And then next thing you know, they entered here, their beliefs getting tested over here. Understanding the market from that kind of full circle viewpoint. Belief is born, belief eventually gets tested. I will tell you right now, 90% of all beliefs formed in the market, whether they're buy or sell beliefs, will be tested at some point. That's why the market ranges 90% of the time. It's just a matter of how long you stay in, whether you're in profit or loss. And most people will not take the profit because they have hopes of it going to the moon all the time. They think that they're a genius every time they get into the money, and they don't book the profit. That being said, with the 2008 crisis, this was nothing more than what drove this down was obviously the fundamentals of the housing and people getting freaked out about that, all the bad loans, right? That's kind of what started it. But what really pushed it was plowing through all these belief structures that have been formed from people holding profitable positions. I mean, you got to think right here. If you entered down here, right? I mean, you never even saw a negative, and you think, man, I'm just a genius. But look at this. Look how aggressive this move challenged. Within a couple of weeks, you go from being still in decent profit to I'm out of the money. What are you doing at this point? You're closing that position. Anywhere below this liquidity line from over here, you're closing, right? So if you bought, now you want to sell right here. What's the other side of a sell order? The other side of a sell order is a buy order. So all these people are being forced to sell because they're getting pushed out of their comfort zone. What ends up happening is that the market is still, the Dow overall is always going to be trending up. It's going to go through major corrections. So what these these ended up being very discounted prices. The market makers, the big banks, they see this liquidity coming into the market. They understand the overall, like the U.S. is not failing at this moment. This is just a cycle in the market. And they use those opportunities to pick up discounted positions at these levels because they know that people are being forced out of their belief structure, from this last bull run. So they're going to end up picking up those positions. And then what happened right after that? Well, the Fed came out, they bailed out all the big banks, and then they started quantitative easing, all that stuff, and it pushed up another bull market. So this was literally just nothing more than a smart money entry exercise where they can pick up discounted positions for the next run. But so that, understanding that, you can kind of put that same methodology on what's going on right now. We've had a humongous bull run. You can see we're leaving behind tons of liquidity. A lot of people in the money. Obviously this thing is way overextended. Let's take a look at what's happening right here at the moment. Okay, this is where we're at. We've had a lot of volatility. We got this expansion line. This is kind of the main point that we're going off of. Now, I don't know if this thing's going to go into another run. I don't know if it's going to fall. All I know is that based on where the belief structures are going to fail is where we need to either enter or manage our positions from. Nobody can tell the future, but we can make smart decisions with tight risk and a pretty certain exit point when we do find profitable trading opportunities. So right now, what I think is we're holding under this expansion right here. I will tell you right now with almost guaranteed certainty that we are not going to stay at this level. Market hates expansion points, because that's where everyone enters. That's the price they're managing from. So it's going to either boost through this and go long, or it's going to turn. But I guarantee you the market is not going to stay at around 25. Basically 25.20 or 25,205, right there. Just figure 25,200. The market is going to hate this price and is not going to stay here. If we hold under that price, we hold under that 25,200 mark, we are going back down to 2156. And then we are probably going to test this liquidity here for 2,000, roughly 440, or 20,440, sorry. So with that, if we get down to this level, if the market is in a continuing a bull run, what are these going to be? These are going to be discounted prices to buy into that bull run right here, because we had belief structure that was created at that level. Okay, so right here, if you are looking to buy the market, if you think, okay, I think the Dow Jones is going to continue to go up, well, this would be an opportunity for you to get a discounted position. Now, if it doesn't end up going, then this is also, let's say you do buy here and it doesn't turn and it doesn't use that liquidity to boost the market up, well, then that's a sign that this thing is probably going into a deeper correction. Where's the next level? Next level is going to be down at 17,100 roughly. And then the next level is going to be down at 15.5. So you can see we have some big gaps to cover if we do get a big correction. But just comparing it back to 2008, you know, with all the more money that's flowing in the market, the more active participants, the more volatility you're going to get. You know, there's been a lot of money pumped into the market. So don't be surprised, you know, if you're getting multi-thousand point swing days. That's just kind of what the market is. That's the fuel it has behind it at this point. Right now, that's what I want for if you are managing investments or you're looking at the Dow Jones as an economic indicator. That's the price you need to be looking at right now, literally today, is 25,200. That is your tipping point. Okay, we get above that price and hold, then you're going to see another run up, and I don't know how far it'll go, but you know the active high is like almost 27,000. 25,200. Look at that price. If we do not hold at that, we are probably going down to 20,490. And then if we don't hold at that, we're probably going down to 17,000. And at that point, you know, we are definitely probably going to be in a true bear market. So anyway, hopefully this helps. Hopefully it casts some insight onto how we feel the market's actually run. It's not based on purely price. It's not based on only fundamental economic news. It's based on beliefs. Remember, if you take anything from this video, that when you trade, it's always because you had a belief born in you that you were going to make money. And with that belief comes a threshold of pain that you're going to be able to take if it goes negative. And from where that threshold is where that's where all the information is given, and that is where the best pricing for whatever trade you're trying to enter is at that edge of belief where it's going to be challenged. So think about the markets from that way. Hopefully this helps, and we'll see you on the next video.